stocks are mixed as that manufacturing data showing some growth in the latest readings. This comes as PCE inflation rose at a slower rate in April, but this data potentially reigniting hopes that the Fed could cut rates this year. Joining us now to discuss, we've got Peter Garnry. He is Chief Global Equity Strategist at Saxo Bank. Peter, thanks so much for being here. I know you're just getting in this data as well, but what is your initial reaction about what this could mean for equities moving forward?
Well, I think that it confirms that the manufacturing sector is just hobbling along, around slight expansion. In this case, there's some bits here that are contracting, but we are facing a world where China is pushing on an export string, and that's really pressuring manufacturing, both in Europe and the US. And one of our main theses is actually that the harder China is pushing on this export policy that they're pursuing with very heavy government subsidies, the harder the pushback will be from the US and Europe. So in the short run, it could cause lower goods inflation in the global economy, but longer run, the goods inflation will be higher because it will force the US and Europe to be more protectionist trade policies and put up tariffs around their economies, and also reshore manufacturing, maybe to friendly countries, but maybe even within the US and Europe, and that could push goods inflation up. But I would also say that for us, the main thrust in the economy, both in the US and Europe right now, is the services sector. And that's also the potential cause for these inflation dynamics to persist for longer than expected. The labor markets are still tighter in the US and Europe than they were prior to the pandemic. And wage growth, it's coming down, but it's still pretty high. And I think when you sum it all up, I think our equity outlook is still positive, and it's driven by the services sector, which is the dominant part of the economy.
So your outlook's positive here. But Peter, what do you think gains are going to potentially look like? And how much of it, when we talk about that catalyst here for future growth, how much of that is dependent on that first rate cut?
I think so this is where it's getting really interesting. I think we have an economy right now that can best be described as a two-lane economy. You have a part of the economy that is interest rate sensitive, consumers that need short-term refinancing on consumer credit, high yield financing, corporations, etc., car manufacturers. That part needs potentially lower interest rates, but then you have AI-related, the technology part of the sector, healthcare, pharmaceutical, obesity drug manufacturing. That part of the economy is powering on. So that's the conundrum that the central banks are facing, because inflation is not where they want it to be, and you have this two-lane economy. I think the rate cuts, we'll get one from the ECB here on Thursday. And then the big question is whether they will pursue more rate cuts. I think it's pretty doubtful, because the growth is coming back in Europe. In the US, I think the rate cut will come later this year. In the short run, I think that we can best be described as an environment of low inflation. The outlook for companies look pretty stable. And there's so much fiscal deficit and fiscal impulse coming into the US economy, and it's also being cranked up here in Europe because of increased military spending due to the war in Ukraine. All of these things point to a positive outlook, and I think we need to get on the other side of the US election in November to really see the next pivot in markets and in sentiment.
How big a role do you think the election will have in when the Fed decides to cut rates?
Well, I think what plays out, the biggest potential fragility to the US economy is that the government has played a huge role in this enormous growth that is ushering over the US society or the US economy because of that fiscal impulse. That is unsustainable in the long run. And I think it has been addressed and mentioned by many people in the States, but also here in Europe, that we need to address the fiscal situation, and it will not happen on this side of the US election. So the US election will be quite crucial. There will be obviously details depending on whether it's Trump or Biden that wins the election. Mm-hmm. I think a lot of the things are still set in stone in the US, their relationship and the frictions that they see towards the Chinese economy. But yeah, I think it's too early to speculate. We'll have to see what happens after the election.
All right, Peter Garnry, thanks so much for taking the time to join us here this morning. Saxo Bank, a Chief Global Equity Strategist.